This is the wrap-up for the live market open on Thursday, November 26th, Thanksgiving Day in the United States. Quiet markets are awaiting us, and we could have very thin trading and an occasional spike that could break technical levels, only temporarily, only a temporary breach, so be careful out there. Boredom most of the time, but we could have some action. Yesterday we had a lot of actions. The main event was the reports coming out of the ECB, rumors, leaks, depends on your point of view. Anyway, they talked about a two-tiered negative deposit rate, complicated to implement, but it's already been done in Switzerland, and could make things, of course, more, could weaken the euro. Broadening QE by buying municipal bonds. There were no numbers, but we did have this poll from Reuters saying that most economists expect negative deposit rate to fall 10 basis points to minus 0.30, and QE to rise from 60 to 75 billion, basically 25% raise in the monthly bond buys. This hurt euro dollar, which fell to eventually to new lows at 105.66, fell from higher levels, fell over 100 pips. It then managed to recover thanks to some profit taking and thanks to sort of mixed US news. Okay, we had a big bulk of events in the United States yesterday. Durables, good orders, beat very nicely with 3% rise and a nice core figures, upwards revisions. Good data also came from jobless claims at 260,000. On the other hand, the core PCE price index, the Fed favorite inflation measure, remained 1.3, quite mediocre. New home sales also mediocre, 495 within expectations, and the consumer sentiment already disappointed, being revised lower. So it was sort of good enough for a rate hike, but nothing to be excited about. In other developments, we had UK autumn statements relatively positive, supporting the British pound, helping it recover. New Zealand trade balance showed a deficit, but it didn't. It was more or less as expected. The Australian dollar was already hit by a big drop of 9.2% in capital expenditure, or capex. Okay, today we have Eurozone monetary data at 9. No big changes are expected. A drop is expected in German consumer sentiment. More importantly, we have Japanese inflation data at night. It's expected to show no real threat of inflation in Japan. Early tomorrow, we have German import prices. And at 8, just as the show begins, there's flash CPI from Spain, first country to release figures for November. It begins the cycle. We have next week inflation figures from Germany, and then for the whole Eurozone. And this, of course, feeds into the ECB decision next week, which is huge, huge, huge. Okay, now let's look at a few charts in the wrap-up. Euro dollar range 105.66 to 106.30. Currently leaning a bit lower, but not going anywhere fast. Pound dollar a bit sliding as well, stronger US dollar, but it has recovered from the lows 150.60, 151.15, and 151.60. Bank of England was relatively dovish this week. Dollar yen sliding from the highs. It found this double bottom support at 122.20. Very strong resistance to 123.60. On the way, we have 122.80, 123.20. Dollar CAD enjoying, the Canadian dollar enjoying some recovery in oil prices thanks to the Saudis talking about coordinating prices. So 133, very round number. Range is 132.80 to 133.70. Wider range, wider to the downside 132.40 and 131.80 to the top side 134.60. Aussie dollar bounced at resistance at 72.80. Weak capex weighs on it. Support line to watch 71.50, a clear separator of ranges, and below 70.65. New Zealand dollar 65.90 at the moment, resistance at 66.15. So remember, once again, we have a very light trading day today. It doesn't mean we won't have action. Rumors, leaks, interviews, breaking news from the Middle East like we had this week during the show. And Well, that's it. I see we have more comments here from Alexei. Agreed with Yohay 100%. You're right. That seems points out towards the strength in US dollar. Thanks. Yeah. Thank you for the kind words, Alexei. Thank you, everybody, for coming to the show. We'll be here tomorrow with a preview of next week's events. Last week, we began with these kind of previews, and we found out that they were quite popular. So I thank Mauricio of FX Street for this great initiative. Okay, so thank you very much, everybody. That's it for today.